Welcome to Sam and Sugar. Today I'm going to speak about Nifty, my view on Nifty for the month of March expiry. So this is the day. Right now the time is 9:50 p.m. and it's Wednesday 8th of March. So my analysis, there's a lot of analysts, they tend to give their analysis and then mostly the analysis is post the event. I don't want to do that, so I'm clearly giving my this. You can see that 9:50 p.m. and it's Wednesday 8th of March. Okay, my view for this month Nifty is we have three major events. One is the UP elections results, which will be out this 11th. The impact will be coming on Tuesday. Then we have Fed rate hike, which is already known to all, and there is no surprise element as such in my view. And the third is, this is the month of March, the end of financial year in India. In India, the financial year begins in April and ends in March. So a lot of traders would like to close their positions in the month of March for their balance sheet purpose, and they would re-enter in the month of April depending upon how the valuations are. So based on three events, and currently Nifty is placed, my view for Nifty is we are in a bull market, clearly in a bull market. Initially in my earlier video on budget, I had mentioned of Nifty to claim 2,700 on the budget day, and 8,950 would be the main target which it would achieve, but there was no specific time frame. I had mentioned in that video, and we did achieve those targets as mentioned in the video. You can watch the link now. In this video, what I would like to say is we are in a bull market, but it's not sure whether we will cross 9,000. But if you ask me what would be the safest thing to do, I would say go for buying calls, or go for buying Nifty when there is a dip, because currently the options data, okay, if you look at the options data, I'll show you in the slides. I'm looking at the options data. So if you look at the options data, which I will show you in the slide, you can't see it, it's very small. Okay, so you have maximum open interest at 9,000 call, okay, which is not a good sign. But today the only good sign what I saw in the mid period, the open interest was around 60 lakh shares, which has now reduced to around 52 lakhs approximately. Means there is a reduction, means there is an unwinding, means the shorters who have shorted their position at 9,000 call have covered it when the market fell today, which means there's a very good possibility that Nifty could breach 9,000 levels. Okay, now what has happened is the sad part is the calls have been written. Sad part is calls have been written at 9,100 level onwards till 9,500 levels. So which means that the upside won't be much as what the analysts are speaking these days on all the news channels. The upside won't be that much. Don't expect major upside. If there is any major upside, say more than 9,200, just because BJP won the elections, then I would say go for buying puts. Don't try to stay long. The market will not hold at such higher levels, considering the traders willing to book profits. This is the month of March, so you need to keep that in your mind. And Fed rate hike is already factored, but what is expected by the Indian market is, are we going to expect further rate hikes, which is also going to happen, which they had clearly mentioned. So we need not actually speculate on those things either. But we need to look at the impact Indian markets will have from a possible Fed rate hike. What I feel impact will be on the dollar rate, and second, Indian RBI governor too could think about a rate hike in India. We could expect a rate hike in India, because normally that's a trend we follow. If there's a rate hike in US, there is always a rate hike in India. So it's always a cascading impact. Otherwise, the dollar rate will just shoot up and it won't be. We are in a bull market, and I can see we have major open interest at 8,800 put and 8,700 put, and thereafter there is major open interest at 8,900 put. So these are the three levels between 8,900 to 8,700, which is where there is a major activity being seen on put between 8,700 to 8,900. So this is the level which I will be looking, which I feel is a correct level to enter in the markets rather than entering now. And if the markets go up and you're not able to catch them, then you just leave it, or you just go short on Nifty, buy puts, and the markets will come down where it started. In my opinion, if BJP wins the elections, we could see Nifty intraday high, make an intraday high of 9,100 to 9,200. If BJP doesn't win the elections, we could see Nifty go below 8,800 and up to 8,700, which are good levels to buy. If they win the election and if Nifty goes higher, I feel those are good levels to sell. So if it goes up, you just sell, it will come down. As far as Fed rate hike is concerned, it's clear that there will be a Fed rate hike, and there will be more Fed rate hikes this year. There's no surprise element as such. So I don't know whether it's a negative or positive event, but I feel whatever it is, you don't play before the event, you play it after the event, because even I can't take a call right now what may happen on that event. And the third would be before 31st of March, all the traders would like to square off their position. So if the market is at a higher level, definitely they will try to square off their position at a higher levels and then re-enter at lower levels. So overall, we are in a bull market, but I don't see much upside, and the downside, max to max, I see around 8,700. So for me, for March expiry, the range, considering all these events, could be around 8,700 to 9,150. 8,700 to 9,150. These are the levels where the Nifty will trade for the month of March. If Nifty comes to these levels between 8,700 to 8,800, then I would suggest you go and buy Nifty and try to average it out. Bring your average cost down and it will go up. And if Nifty goes up and you're not able to buy, then you can wait for Nifty to reach 9,150 levels, or 100, 150 or 9,200, between those levels, and you can start selling Nifty futures, or you can buy puts. Those are the safe bets what I have for the March expiry. So I would suggest traders to be very sure of what they are doing, because don't go with what the analysts are speaking on TV channels. They are just saying that Nifty will cross 9,000, Nifty will cross 9,000, but I don't think so it's going to happen. As far as we Indians are concerned, we know what will be the outcome of UP elections. So based on that, you have to really play safe. Don't go with what the news channels are saying. They are being paid, therefore they will keep saying those things so that they tend to get buyers at a higher levels, and they manage to square off their position at a higher levels and re-enter below. So I would suggest all the traders to be very alert in the month of March. This could be a very crazy expiry, one of the crazy expiry which I am expecting. I would be surprised to see if Nifty goes below 8,700. In that case, then I would be also on guard. But mostly I feel Nifty should be above 8,700 and below 9,150 for this expiry. So this is my tip for March expiry, and I would give more updates maybe in the next week once these two events are over, to what you need to look at. So let's wait. Based on these two events, you take your positions, and you can look at Bank Nifty or Nifty if you want to play on these two events. But currently, if you see, the IVs of call have gone up, which is not a good sign, because you may not get value for money. In case even if the Nifty goes up, say by 50 or 100 points, you will maximum gain around 10-20 rupees, which doesn't make any sense. Currently the valuations of Nifty are very higher, and I would suggest to take positions in Bank Nifty and track Nifty. Based on Nifty, you take your decisions in Bank Nifty. Remember the range: 8,700 to 9,150, 200, 9,200. This 500 point direction. Currently we are stuck at 8,950, 920. 8,920 levels, exactly 220 points ahead of 8,700 and 280 points behind of 9,200. Don't forget to subscribe to our channel. Stay connected, stay blessed, take care, have a great day.